Hey, what's going on, guys? I'm doing an update, and I'm gonna hit on crypto first, since I was kind of leaving for the end. Today was kind of a boring day anyway. Traditional markets, I thought. Um, UVXY being short volatility was kind of the thing that performed the best, and since it was kind of a low energy day, that turned out to be pretty good. I mean, the UVXY was down 7%, almost 8%. I'll get to that in a second. So here on Bitcoin. A couple things. Intermediate term, we'll look at the cycles also, but from a trend perspective, I want you to keep an eye on this green line, this dotted green line. It is dotted, doesn't really look that way. That's our pi line. And so this is a concept that's a cyclical concept. You cycle away, you move back to it, you move away, move back to it, move away. We reverse back through the 200 and pi here. This is the hourly chart back at the end of the month in July and then the start of August. And you couldn't hold that 11,1250 level, 250 level. And so again, we broke, cycled away from it, and we just recycled back to that here early in the week and failed twice at the underside of pi. So this is pretty indicative when you traverse both sides of the average of a range trade. So what you don't want to be doing is chasing these bars right here after you've come from lows down here. You want to stay wider. And I think, I don't know, I would like to hope that people aren't using 10,000 as a stop when we've already been through it once, twice, 3 times, 4 times. This will be the fifth or sixth time we've been below 10, only to kind of pop back up. So I'm fine with buying these dips. I mean, the 4 hour has a nice low cycle right here. All right, and then I would definitely take some if we get back to this pivot high. And this is the intermediate term pivot now. You can see it a little bit better on the daily. And so I can mark that up. So, right, lower high, lower high, lower high. And then this has been pretty consistent. So you got a little bit of this going on, right? So this is this consolidation. We're cycling within this consolidation. So at some point, technically it's either a break here, right, or a break here. I'm a little predisposed to the upside. But if you are buying these dips, like we just said on the 4 hour, this is a good place to run your risk, depending on how long you are. And then I've got support right here. And then people will be using the 200, and then our pi line is down here, and there's 6. Pretty doubtful you're going to get all the way back to there. I mean, 6 was the breakout, and then this was kind of the secondary move here. So you got a lot of support, basically entire month's worth of trading all in this zone. So I'm not surprised the market's been holding in front of this block. You guys can, does that make sense? So this is going to be tough for the market to blow here. So that's why we've been okay buying dips. I kind of thought we're going to go with the cycle. I'll show you in a second here why I didn't take any profit up here, but that would have been good. If you guys sold anything well here, then this is kind of a no-brainer to be buying back. It's just the market's just kind of in this sideways digestion for the last 2 months. Is what it is. If we look at the cycles, so I've talked about August being kind of a pivotal cyclical month, and I'll show you why. I think I'll change these colors up. They looked good when we were building our rhythm platform out. It matched up purple, but now it's just kind of girly. So right here, coming off this cycle peak in June, we essentially been on a cycle of lower highs from here, And then I thought with this turn, getting above this pivot high right here, that maybe we were going to turn up with this cycle, means we could have rallied into October. And it looks like we're getting the opposite of that. So I'm kind of thinking it's going to be more of the sideways consolidation and a breakout more lining up with October. Maybe it depends. If you break down from here and you cycle back towards that area of support, you might get a low on the cycle in October. Or if we wedge and then you start to take out, if we keep putting in these series of lower highs and you just wedge and then you break out of the wedge to the upside, we could see a breakout into October on this turning point. Anyhow, this move from 12,000 down to this low coincided pretty well with this turn. So if you look at here, this actually turned, we actually bottomed here with this turning point. And we rallied halfway on this cycle, and then we flipped again down into the bottom here. And then you had a bounce. So the next turning point isn't really till, the end of the month. So nothing to get too excited about. We'll see what happens at the end of the month on this turn. And still, it's too bad we couldn't get a stronger move to newer highs with this turning point here in August. So I think we might just kind of be more of a hurry up and go nowhere until October. All right, and then what else do we do today? In traditional markets, I still think the risk is, I'm long equities as far as S&Ps and then short UVXY. So UVXY is being short volatility. That's obviously a risk-on type of play. And reason being, because we're long the yen, we're long bonds, we're long gold. So we're in this growth slowing camp, disinflation, moving towards recession, globally at least. U.S. has been the best place to be on the long side, but everywhere else is slowing and pretty much a disaster. So there's plenty of reasons for stocks and things to go down, but at the same time, you've got Trump administration put below the market. He's getting the answer to get the deal done. China probably wants to get a deal done too, because this is horrible the longer it drags out for them. We got the Fed put below the market, and then you still have all this pension money that's chasing yields. And so until we really break the levels I've talked about, big picture, there's still reasons to be long equity. So you can have the recessionary call, you can like bonds, like fixed income, but you don't necessarily have to be short equities. So I've been playing S&Ps on the long side, and I kind of think the market's going to squeeze. The fact that we made another higher low today, this is a higher low relative to here, this looks pretty vulnerable for a squeeze on the up. So whether it's 1240 or 1250, we get through there, we kind of have an interesting convergence of the pie line, the 200 right here, also at 1229.56. That's a key point. It's also the top of 2 standard deviations from the low in the first part of August. So if you get above there, though, then it should test the underside of 3,000. I would be a seller there for sure. We actually sold it the morning before the Trump headlines, right up just because it broke, and that was the underside. That's a major, major level. So that's where we're watching on the up. And like I said, I'm long, so I'll be taking profit into that type of move if we get it. On the downside, I have a little bit of short exposure via the Russell, but mostly playing long bonds and the yen. But guys, this is just, I teach this strategy on the UVXY. This ETF is just a great vehicle to play on the short side. I've been a broken record about it for years. But I got to get some of you guys learning these options. It's a great way to swing trade this ETF and just around your positions. I mean, this has been one of our biggest areas that we've been able to capitalize on. So that was the best performer today. And I would just encourage you guys, if you want to learn this stuff, whether it's the Forex market, options, the volatility strategies, if you sign up to do our coaching, I will help you with any and all those strategies in our group coaching sessions, and then you have my attention on a one-on-one basis. But also, this is a great funnel and opportunity and just, I don't know what you want to call it, offer that I put together. It's free to get our ebook, and I talk about why the cycles matter intraday and how we use them, and then even big picture stuff about like the global economy and different markets peak at different times, whether you're talking about gold and commodities or when Greeks or bunds bottomed out. But anyway, if you go through this funnel, guys, I have it on my Twitter handle. My Twitter is at the Jason Jenkins, at the Jason Jenkins. I pinned it right here. It's free to get the ebook. I'll put it in the link here in this description of the video. But I want to show you guys, if you go through here, you not only get the ebook, but I put together our Pi Cycle trading course. So this is one of our best strategies, or simplest strategies. I just showed you on Bitcoin how the market was even cycling in and out of that hourly 4-hour Pi cycle. But I put the course, I put all together these bonus videos of the global business cycle report, institutional report I did back in the day, the history of the business cycle, 6 recorded live trading sessions that we do when we trade together in our live room, which you can also sign up for that in this funnel. And then video coaching sessions, like there's 3 bonus coaching sessions. So basically, guys, this course should be $2,500 by itself. All right, I have it priced at $499, and all these bonuses. It's $1,000 value here for $47. So if you guys are interested in any of these markets or what we do, or just you need to have an idea about the cyclical analysis. I watched some guys on Real Vision the other day, and it's always this. These guys are big traders, usually successful firms, been around a long time, but they still in their world it's fundamentals and technicals. No one talks about the cyclicality of markets or cyclical analysis. So for $47, it's a no-brainer. And then if you guys go through the back of the funnel, if you sign up to be part of our live room where we trade together every day, be part of that membership, then you have the opportunity also to pick up our Forex course, options course, and the proprietary trading model, and along with 3 months of the live room membership. It's $5,200 worth of my products and our services. And again, this 9-hour trading model is an institutional model that we built over 10 years. So you're going to get all these courses, guys, for $1,000 at the back end of this offer. So I put literally months into putting this whole thing together. I think it's the best offer if you really want to learn to trade the right way, cyclically, work your position size, psychology of trading, be a part of a team, a global team, edges, our analysis, support, trading together, information that comes with that, but then working together in a coaching environment. That's where you're going to see, what am I doing wrong? What are my bad habits, my good habits? What can I do differently? You got to you need someone to come in and look at your trading from an outside perspective. That's where you're going to really see the growth. Otherwise, you would already know what you're doing wrong. You would be able to correct it and make adjustments. You're too caught up in your own head and your own junk and your own problems that you bring into the market. You need a coach to come alongside and help you straighten a lot of that stuff out. All right. So this, actually, I don't have the coaching in here for this price, but if you guys sign up and do if you do this course, you can message me, and I'll work out something for you guys on the coaching at a discount too. All right. Hope that helps. I don't think I wanted to hit on anything else. I got some funnel hacking to do, so I'll see some of you guys in the morning. Have a great night.